Good day, beautiful people, brothers, sisters, family, friends, strangers, and the estranged. A couple of weeks ago, I think it was three, I issued an alert regarding what was happening, unfolding in the markets. I rather quickly followed that up with a warning, red alert, that it was happening, that the pace of the unraveling of the markets was quickening and action should be taken, as it appeared as though the bear camp was about to win this battle in the clash of the Titans, as I refer to it as, and it is a clash of formidable forces and powers. Now, let me say this: that I've been trained in the markets pretty much as deep as it gets. Yeah, it's very fair to say. And my training reveals to me, by way of the markets or through the markets, the state of the economy, but also the human condition in many ways. And this provides me with insights and understandings, which I share with you so that we're not caught off guard, that we're aware of what's happening in our world, if you will. Markets provides me those insights. So after issuing the warning, the markets took a rather significant decline, tested support, but never or failed to break support with a closing below support, which breaks it. But it was right there, and it looked as though it was going to happen. However, the bull camp came back powerfully with one of the more significant reassertions of its authority, its power that we've ever seen. I think we rallied as much as 350 some odd points off the lows. That's huge, very, very big. Now, it is notable that the rally took place during the most opportunistic time of the year for a rally, the Thanksgiving period. It is a period of great illiquidity. Many people aren't at their desks. The larger institutions are more or less closed, and so the market can be rather easily manipulated. Also, what's notable in the rally was that there was a huge reallocation, repositioning of monies, while the tech sector, which has carried the markets through most of the year, mm, was rather dormant, quiet. The areas that rallied were the forgotten for most of the year. The retail sector, which is quite shocking given the outlook, I believe, for retail and the consumers. But it rallied with great power. Um, one might say, to some extent, some desperation, as capital was fleeing the areas which it has now become increasingly concerned about, the AI sort of arena. So let's, for the sake of understanding, um, review the two camps. The bull camp presently is operating in its strongest period through the year. Um, the seasonals from October through, I'd say, more or less the first quarter of the new year are very strong, favorable seasonals, technicals for the bull camp. And I would say to the tune of, a 70% sort of probability. Now, when a market person speaks about something being powerful or something being the best expectation, the most favorable expectation, 70% is very, very high. Um, I doubt I know any tool, for example, that operates greater than 85%. If you've got an 85% tool, I mean, that's almost godly, you know? That's pretty incredible. Generally speaking, most tools of capital operate with something in the neighborhood of 60%, and that's workable. Now, every tool, though, the further you go out, the further you expand its horizon, the lower its credibility or statistical validity. Um, so all tools are operative for a period of time, and risk managers use that period of time to manage their risk and to make their capital allocations. So the seasonal of 70% through this period is very strong. That's part of the Titan camp. Another part of the Titan camp is the expectation of significant Fed easing right at its doorstep. In fact, some practitioners are anticipating aggressive easing all the way into the new year, with the expectation that we'll have a new board president and they will ratchet rates down very sharply, um, consistent with the demands of President Trump. That's more or less the bull camp. Liquidity, seasonals. The bear camp is alarmed at the current demands by sovereign governments for capital. They're really competing more and more. And to that note, or on that note, Japan is issuing a warning that they are likely to tighten their rates further. They fueled the economies of the world for a couple of decades now, and they're being forced to pull back to lower the liquidity that they've been fueling the markets with for a long time now. And the reason they're being forced to pull back is that they're very concerned about the outlook for the yen, their currency. It's very unstable. It's gotten very cheap, and it appears to be getting cheaper, um, on the verge of a crisis if they don't change policy. To some extent, they're inconsistent in what they're saying they're going to do, because while on the one hand they're speaking of monetary tightness, restrictiveness, on the other they're increasing their debt outlook, their debt load. Now, with respect to debt, the average economy today is operating at I would say two times what a few years back was considered third world fiscal management. Um, a debt to GDP ratio of 70. Presently today, Japan's at about 240. We're at about 125, and most of the European economies are around that same sort of number. Again, those levels just a few years back were considered tragic. You know, no way could your economy survive. We've learned to survive higher debt loads by enabling our feds, our central banks, to purchase assets. Unheard of years ago. In fact, there's a whole school of thought um, championed by Milton Friedman, the father of modern economics, the Chicago Booth School, that the central bank should never monetize the debt. That is, where the Treasury issues debt, and the central bank buys the debt. It's fiat currency. It's fiat money. So these current levels are very alarming. And not only do the bears see increasing debt loads amongst the sovereign governments, they're seeing it more and more in the capital markets, or in the private markets, I should say, with increasing demands to fund the transformation into the AI reality, the AI vision, the Jetson reality, as I really like to refer to it as. So there's that. There's also um, very foreboding economic indicators in the economy, in the global economy. I believe now there are as many as 23 states who are officially in recession. The numbers on the consumer are, I find them rather um, threatening, um, deplorable, at recessionary sort of levels. In fact, I do believe we're already in a recession. It'll be some time, the way the numbers get recorded and accounted for, it'll be some time before it's declared, because you have to have 2 quarters of negative GDP. So, after you have the two quarters, then there's another quarter to aggregate the data and then pronounce where you are. So, um, you have to be well ahead of that official announcement of recession if you are, in fact, in a recession. But the consumer, from my perspective, appears to be very weak here. Um, Sentiment is at deplorable lows. Production is falling sharply across the nation. There are some terrifying numbers that came out of Texas this past week, in fact. Texas is about, Texas may be as much as 5 to 10% of our economy now. But the numbers out of Texas were shockingly were shockingly poor. So the state of the economy, the real economy in America right now, is teetering on at recessionary levels. So there's that. Then you also have just excessive evaluations of stocks, as high as we've ever seen them, um, in many sectors of our economy. And we've even come up with new ways of allowing for high valuations. I would say there too, we've really gone too far. So, like I've said before repeatedly, there's a clash of these titans, these forces, and we will see whether we will see in some very near term a victor here. Um, I would say within a maximum of 6 months, most likely 1 to 2. Um, I'm going to anticipate that the bear camp wins. I believe they have the stronger hand. It'll be painful for all. I don't like um, prognosticating pain, but it is what it is. And I give you these insights again from years of toiling in the markets. So a couple of things I think will kind of be the sword of Damocles in the markets for the bear camp. I do anticipate that Japan will soon raise rates. I do anticipate that the Fed will aggressively attempt to lower rates, but find their efforts impotent, because they'll be what's called pushing on a string, meaning that um, the lower or the more they try to increase money, liquidity in the system, the more the back end of the curve, longer rates, will will rise, go higher. As after two rate and rate increases or two efforts on their part over the past year, longer term rates have gone higher. So they can try and manipulate the curve and take short term rates as low as, low as they as low as they can possibly go. The longer rates will go higher, and more of our economy is dependent upon lower rates than shorter rates. So I believe that the bear camp will win that. Both of these events, the Japanese raising rates. Oh, I forgot one. The ruling on the tariffs by the Supreme Court will be a notable event. I anticipate that they will rule, that they're illegal, but they'll give the administration some out, some time. But the fact that they will be declared illegal will force the administration to redo or do for the first time a legitimate budget sort of forecast. Right now, in their numbers, they're assuming that their tariff policy will generate 3 trillion of income over the next 10 years. Well, I know, outlandish that any administration goes beyond 4 years, but it is what it is. But once that's declared, they'll have to redo all of the numbers, and that I would think that that's going to be that reality is going to be a shocker to the market, despite whatever efforts the Fed makes or attempts. So there you have it, Clash of the Titans. Call me Perseus, and we'll see how things unfold. Until then, until next time, stay alert, stay tuned, and Godspeed. As you know, I'll be officially launching Boom Boom VVV this coming Sunday. Um, not only do I have a word, not only do I have a message, I have a frequency that I'll be introducing in my sermon slash manifesto. So I hope that you will come and join me um, for the official launch. And I'm sure that this journey will achieve the objective, or I should say objectives, of raising frequency, raising, uplifting, inspiring voice, and a coming together of a collective frequency vibe for the betterment of us all. That's the aim. That's the goal. So, with that, have a great weekend. See you on Sunday. And again, Godspeed. Namaste.